Investment challenge day 17, and this is going to be a very basic, more or less an instructional video, and I'm going to speak about dividend. And most of you probably know what it is already, so I'm not going to spend so much time explaining it to you. I'm more going to explain how I reason when I choose for dividend, or if I do it. And I'm a firm believer in keeping it simple, and that's exactly the strategy I use for this one as well. So looking at a couple of companies that will hand out some of their profits, and starting off with Investor, big Swedish company run by Wallenberg family. Invest in Ericsson, Atlas Copco, SB, Saab, really big companies. And as you can see on the curve here, they do a very good job investing their money. So that's why the 3% might not be a really high number, but it's considered more or less a very safe investment because of the stable curve. And also, if you count the 3% plus the from 225 something like that to 340, it's kind of a decent profit just from this stock price increase as well. So this is a company that I do like. And let's move on to Nordea, a Swedish bank. Banks are considered reasonably safe investment and are famous for handing out a lot of their profits, and 6% for Nordea is kind of good, I think. And here you need to be you'll get some opportunity to get into a bank stock cheap over the years. And for example, the Panama scandal, it's around here, and Nordea also experienced a lot of other problems around here. But you always know that a bank too big to fail mentality, it still exists. So you know it's not going to go under. And if you see it drop really low, like even at 80 here, I felt this is cheap for Nordea. So just start buying here and buy all the way down to the bottom, and then you'll have a really nice both dividend and a cheap price for a decently stable stock. You can look at Tele2. We jump up a little more to 70% dividend, and here we can see an example of, even if we do have like a 7% dividend, it's going to be hard to make money from this stock. We wouldn't be, if we bought here, and maybe we'll be plus if we calculate the drop on the price but remove the dividend. So no matter where you bought here, you're going to be down on this stock. So no matter if it's 7%, this is not really something that I'll buy or touch. If you believe there's a future in being in telecom and being a provider as Tele2 is, then this is probably cheap, and the 7% will probably go up because it's based on the stock price. Then this could be an investment, but it's not for me. And then it's Kinnevik, also kind of big Swedish company, investment company with 11% dividend, and we see it's higher here than it was in Investor. So why is that? First of all, we are basing this based on risk, more or less. And in the Kinnevik company, we have investments in Clear, Rocket Internet, Zalando, Millicom, Metro, amongst other companies. And this is, according to me, a lot of crap in their investment portfolio. And that's where you see the stock price here is not as stable. It's actually going down. So this is, to me, a downtrend. And this needs to be priced in. And also, if we buy it here, it's not going to be 11%. It's 11% here. So the amount will be more and more. And most of the time with the investment companies, you pay pretty much what the content of the portfolio is. That's the valuation of the company. But you also pay either a premium, you pay more because there's a good board of directors or good CEO that makes good decision and makes the company worth more and more and more, so you pay a premium. Or you pay a rebate because there's normally lots of risk involved. And that's what we see here. So to sum this up, if you want to invest in dividend, I guess you're a kind of a passive investor. You want to just put it there and know about what you're going to get each year. If you're going to do this, I'd suggest finding an investment company, because that will spread out your risk. Even if, for example, in Investor, they had Ericsson, which more or less crashed, and it didn't really affect the course super much. But if you invest in Ericsson alone, you would have taken a really big hit. So find an investment company to spread your risk. If you don't want to use an investment company, you really need to analyze the business model over time. So you need to look at how will this business model be performing in 2 years and 3 years. And then, of course, third, reinvest the dividend. This is no dividend. This is 10% held over 20 years, and this is reinvesting. So really get the snowball rolling and reinvest what you make. So that's it for today.